So thank you for coming. As you just heard, we've got people listening in on the web, and thank you for coming. For the people here in person, thank you to the panelists who have donated their time to talk about blockchain and entertainment. So the reason we picked this program is because we believe blockchain is coming to the entertainment space in a big way and has the potential to disrupt it. My name is Chris O'Brien, and I'm a partner in the Entertainment and Media Group here in Los Angeles, and I'm also the co-chair of our national blockchain and digital currencies practice. So this topic fits right in the crosshairs of my two practices. We believe the technology, while it's in its relative infancy, is going to impact the entertainment space in a big way, in a similar way to what we saw with the web in 1.0 and 2.0, platforms coming and disrupting television, large middlemen, technology companies coming and disrupting music. And as Mark Twain said, history doesn't repeat itself, but it does rhyme. And I think we're on the cusp of a technology here that's going to have an impact. The format here, this is a pretty manageable group, so I'm going to encourage people to speak up and ask questions or make statements anytime they want. Our format will be to go through a little bit of basics on blockchain and ramp up into how it's being applied and may be applied in the entertainment space. I'll do maybe 5 or 10 minutes of a slide deck to run through that, because I suspect, like any audience, we'll have people who are new to the space and we'll have people who are expert at the space, and we'll all move up the learning curve just a little bit and have the common nomenclature. And then we'll have a discussion. My partner, Shane Nix, on the end, one of our tax lawyers, is also going to do a module on the tax aspects of owning, holding, buying, and selling cryptocurrencies, which is a hot topic for people who are in that space or thinking about being in that space. So the first thing I'll do is ask the panelists to introduce themselves, give you a little bit of a thumbnail about how they intersect with the blockchain, and then we'll jump into a little bit of background. Alex, you want to start? Go down the line.
I don't know if we need to do sound check, assume everything's working.
Sounds like it's good.
Yep. Yeah. Okay. Hi, everyone. My name is Alex Raskin. I'm a managing director with Houlihan Lokey. Just to give you a 5-second overview of our firm, it's a publicly listed investment bank with over 1,000 employees around the world. We cover over 40 different industry verticals and support including media and entertainment, which is a big focus for our firm. Some of our clients in the media entertainment space included Getty Images, MGM Studios. We're working with Weinstein Studio on their bankruptcy at the moment. We service our clients through their life cycle, starting with earlier stage companies and then helping them grow through raising capital, mergers and acquisitions, and for some less fortunate ones, we have the largest restructuring practice in the world. And I've been exposed to that side of the business quite a lot, and I've seen how some of the companies, particularly in the media space, struggle with some of the transitions. If you think about Yellow Pages that basically gone out of business, and a lot of other names like that. And as a result of it, when that sort of got me interested in blockchain as potentially another disruptive technology. I am one of the co-founders of Crypto and Blockchain Task Force at Houlihan. It includes over 20 MDs from across the firm. And the idea of that task force is really to understand the technology better, how it impacts our clients, what kind of opportunities it can create for us, and frankly, should we be worried about disruption in our own investment banking industry? And with that,
Hi, I'm Randy Saff. I'm the co-founder and CEO of Lucid Sight. Prior to Lucid Sight, I co-founded an iPhone gaming company called Gerbo. We had 14 of the first 100 free iPhone games. That's probably the only statistic my kids will ever care about in terms of business. They
care about the college fund too,
and the money, yeah. But I've always been interested in frontier gaming. That's what we call it when it's a space that is not well established. The early days of the iPhone industry is now, the App Store industry is a $140 billion industry between iOS and Android. When we started, it was zero. So we look at blockchain the same way. It's a new platform for gaming and entertainment. We have 2 games. We have one's called Crypto Space Commander that we put out already. We have another game that's with a major licensor that we'll be putting out imminently. And the idea is that this is just another area, another vertical of merchandising and gaming for the entertainment industry. And we're in the very early frontier days, and it could be as big as the iPhone industry.
Hi, I'm Kinsey Cronin. I'm Director of Business Development at StartEngine. We are a platform that launches ICOs under Jobs Act laws. So they're regulated and they're exempt from registration requirements, but there's a lot of requirement that the SEC has if you use Regulation Crowdfunding, Regulation A+, or Regulation D 506C. So StartEngine works in that space. We've worked in that space since 2015, prior to getting involved with ICOs and with blockchain. But we've become more involved since July when Jay Clayton started talking about this space, and since then
That's the chairman of the SEC.
Sorry, the chairman of the SEC has, and the SEC in general started getting involved. So we found ourselves right kind of in the middle of this, with people coming and asking us, how can we launch an ICO and do it in a way that is compliant with the regulations in the U.S. So that's become a big part of our business over the last 9 months or so. We've launched quite a few companies, and we have a variety of services to companies that are in this space that want to make sure they're doing it compliantly.
I'm Shane Nix, I'm tax counsel here at Venable. My prior background is I did a lot of M&A transactional work in New York, did some startup work in Silicon Valley, all in transactional tax area. Now at Venable, I'm doing most of the same, but a lot focused on entertainment companies, and also do a lot of tax planning for talent. And in the entertainment area, there's a lot of people that are interested in Bitcoins and currency, and given that it's a new technology, there's a lot of open questions in the tax area. So I'm joining you all today to kind of talk about it at the tail end.
And I'll say on Shane's behalf, my behalf, and the firm's behalf, we won't be giving any legal advice today. Any views we express are our personal views. So let's jump into a deck and talk a little bit about the technology and how it's being applied in the entertainment space. So what is blockchain? Blockchain refers to cryptographically secured decentralized ledgers distributed among parties using the ledgers to transact within a common network. It's a bit of a mouthful. The best analogy I've seen is to a gigantic Google spreadsheet or Excel spreadsheet that anybody who wants to edit it can with the permission of the network, and then every line of the spreadsheet is there forever and can't be changed. Only the bottom line of the ledger can be changed. And if you want to impress your friends, you can refer to this technology as DLT, Distributed Ledger Technology. That's a little bit of an inside baseball way to refer to it. What's the big deal about that? Well, it actually took a long time for people to determine that this was a big deal. First, blockchain was Bitcoin, and it was sort of a niche technology that people didn't really see much in for a lot of years, but the idea is becoming a big idea. It's trustless. The people involved in the blockchain don't necessarily know each other or trust each other, and they're able to do transactions. It's cryptographically secure. I say unhackable-ish because nothing's unhackable, but the fact is the Bitcoin blockchain has never been hacked. Bitcoin wallets have been hacked. Bitcoin banks have been hacked. The actual Bitcoin blockchain has never been hacked, and it's worth billions or maybe trillions at this point if you could hack it. People who know this technology better than I have said the computers that can hack the Bitcoin blockchain won't be invented for 100 years. Might be famous last words. So I say unhackable-ish. Things are chronological, time-stamped, and immutable. Once the transaction is recorded, it can't be undone, and it's shared. And it's decentralized. It has the potential to eliminate governments and banks from transactions. You say, well, I kind of feel ambiguous about ambivalent about the government and banks, but I don't hate them. Well, imagine you're a millennial. Some of you are. and you came of age when the worldwide financial economy was crashed by banks, and depending upon your politics, with the assist of the government, and nobody got punished. You saw your parents lose their house and their savings and maybe their jobs. The idea of doing things without governments and banks involved is a very appealing idea for certain people in a certain age and of a certain political bent. And a lot of those people were early adopters of this technology. What's the difference between Bitcoin and blockchain? There's a big difference. Bitcoin was the original blockchain, and it is an example of how blockchain is used, but Bitcoin is not the blockchain. Blockchain is a technology that has applications well beyond currencies, which is what Bitcoin is. It's a type of stateless currency. I won't go into the history of Bitcoin, but it's actually quite fascinating. If you look at it, it was anonymously sent out into the world, and the people or person who created Bitcoin has not stepped forward and said, I did that. And it took a while for the technology to catch up. But Bitcoin is on a blockchain, the original blockchain, but blockchain is a technology that has applications outside of Bitcoin. So let's talk about some of the big ideas and how they impact the entertainment space. CryptoKitties, raise your hand if you know what CryptoKitties are. Have you heard about CryptoKitties? It's almost everybody, maybe 3/4 of the room here. CryptoKitties is an online game where you can basically get a cat, a unique cat, and the cats can actually breed and create another unique cat. I've never played it before, but it's got a lot of cachet and people are using it. And if you saw the New York Times style section this weekend, they did a story about a CryptoKitty being auctioned off, and the final price for the CryptoKitty was $140,000. So somebody paid $140,000 for a CryptoKitty. There had been one sold previously, I think, for $100,000. $600,000.
No, 6 have been sold.
Oh, 6 have been sold for $100,000. And one of the big hedge fund managers in the space who bid on the $140,000 said he thought that one would be worth $1 million in the next 10 years. So a verifiable, authentic, limited supply or single unique thing that can be created through the blockchain. This relates to this idea, which I think is the most exciting idea when you apply blockchain to the entertainment space, which is digital scarcity. The idea that you can have verified owners of IP, verified users of IP, and limit the supply. When I think about digital and I think about entertainment, I think about ubiquity. I think about spillage. I think about people stealing music and illegally downloading files. Blockchain at least has the potential to bring digital scarcity into entertainment, and that's, to me, a bit of a nirvana for the entertainment space. Another big idea is smart contracts, which, if you know anything about the space, you've probably heard about smart contracts. Smart contracts are a way that parties can automatically transact if certain things come into play and certain prearranged things occur in a sequence. Think about a vending machine on steroids. When you go to a vending machine, you form a contract. Put your money in, you hit the buttons, and hopefully the thing comes out. There's a contract formed somehow in that arrangement. The idea of smart contracts on blockchain is that plus, 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 plus. And there's an example here about streaming and having the artist paid directly in the blockchain on streaming. Some people have said, are they smart? Are they really contracts? It's a controversial area from a lawyer's perspective. There's certainly a lot of capabilities, but there are traditional questions about contract formation, dispute resolution, and it's not 100% clear that we are really talking about contracts or that it's such a wonderful idea. Another big idea in the space is dynamic pricing. The idea that instead of setting one price and whatever the supply and demand is, that's the price, the blockchain is usable to set prices depending upon supply and demand at any given time. So think about live events, ticketing and live events. The artists don't do that great with the current model. The venues don't necessarily do that great with the current model. The secondary market captures dynamic pricing in that they're basically scalping tickets for what the market will bear. the venue and the artist are getting paid off of the face price, which is rarely going to equal the gross that the market takes in. So there's an idea here of being able to charge surge pricing or to maximize the ticket sales through a blockchain that, again, is immutable, open, the data can't be changed once it's there. That's an exciting idea, I think, for, those are multiple exciting ideas for folks. This is an interesting graph that was produced by McKinsey, so full attribution to them. It sort of goes around the wheel if we look at it clockwise. In the upper right, transparent person-to-person transactions, so artists transacting directly with their audiences, so cutting out the middleman. Dynamic pricing we just talked about. At the very bottom, micrometering and micro monetization. So somebody interacting with an artist or a rights holder and being able to pay them for things within the experience that aren't necessarily the list price or the entry price. Establishing a reputation system really has to do with both sides knowing who they are and being able to for the artist, I think, or the rights holder, being able to control relationships or having a deeper relationship. And then in the upper corner, or almost all the way back to 12, the idea of smart contracts and being able to establish liquidity in a relationship where the parties aren't necessarily going to see each other face to face. There are some examples of companies that are already in the space, in the entertainment space, bringing blockchain. I know some of these companies, but I've read about what they do. Ujo did an online distribution of music by an artist. The artist was paid directly, and the royalties went to everybody who was involved in the creation of that music. I won't go through all of them, but you can see DRM companies, you can see peer-to-peer video content hosting, e-commerce, and Spotify acquired Media Chain as a universal media library. And we're going to talk about examples in our group of projects that people are aware of or that they've worked on. And Randy's got quite an interesting one that where he's the CEO. So where are we in the hype? Everybody understands that this space is incredibly hyped. This is an interesting graph by a consulting firm called GARTNER. And according to them, and I think it's probably largely true, you can graph any technology going back to the railroads on this hype cycle. There's a technology trigger. People get very interested, perhaps over-interested, overfund a technology, and reach a peak of inflated expectations, which is frequently followed by a crash of some grade down to a trough of disillusionment where a lot of players exit the space. And then the underlying technology that has value proves itself, and players stay in the game. I think Warren Buffett said famously, you don't know who's wearing a bathing suit till the tide goes out. But you come back to a plateau of productivity. We certainly saw this with Web 1.0, right? If you lived through 98, 99, 2000, you're familiar with the idea of the peak of inflated expectations, and you're familiar with the crash. The web didn't go away. And if anything, it's a more important part of our life than it was in 1999 and 2000. But we don't have 15,000 public companies who play in the space. We have a much smaller and group and a steadier flow of productivity in the space. There are clouds looming over the blockchain space and the digital currency space. One of them that we'll talk about more is the absence of regulatory clarity. The biggest single legal issue in the U.S. for a lot of these companies is that they have funded themselves through what are called initial coin offerings, or ICOs. And early on in the process, a lot of people got comfortable with the idea that those weren't securities. So they were issuing just a thing or a digital commodity. U.S. regulators don't necessarily agree with that. Are in the process of grappling with that question. If that issuer turns out to have issued a security and it wasn't registered or exempt from registration, that's what we call in the legal business a big issue. fraud is disproportionately prevalent in the space. The Wall Street Journal just did a story today where they looked at 1,450 ICOs and they found red flags, and these flags seem pretty red to me. Fake executives, plagiarized language, overhyping in about 18 or 19% of the ICOs that they studied. So there is a lot of fraud in the space, and frankly, it's making the mainstream more wary of the space. That does mean that 80% of the ICOs they looked at didn't have the hallmarks of fraud, but 18% is a lot, depending upon how you look at it. And you see a lot of indiscriminate funding of blockchain products. Kodak's stock famously got bumped up 20% one day because they said they were doing a blockchain project. There's a lot of money coming into the space, and it does feel like 1998, 1999, and Web 1.0 in many ways. Having said that, we as a firm are still big believers in the long-term prospects of blockchain. We believe the technology is transformative. It's not as transformative as all the projects would have you believe, but within the places where it makes sense, we think it's revolutionary. A little less sanguine about digital currencies, but I personally think we'll have digital currencies, until the robots take over. They're part of our a part of our life. So with that, hopefully a decent background in the blockchain, I want to open up the discussion for the panelists. And the first thing I'll do, I'll exempt Shane from this question. Can you describe one or two blockchain initiatives in the entertainment space that you're familiar with, whether you've worked on them or not, that you consider to be interesting, that you can sort of give us a thumbnail sketch of? Kinsey, do you want to take that question first?
Sure. Sure. A couple that are interesting to me. One is one that came through Start Engine called ZenCoin. That is essentially a way of allowing for Generation Z creating a lot of user-generated content, and it allows for them to maintain ownership of that and to actually earn for their social media influencing, even if it's at a small level, so it's at like a commercial level. That one's pretty interesting with the ZenCoin. And then, of course, Kodak is really interesting to me, the Kodak coin and what their plans are right now to do for like rights management and how to maintain that ownership and prevent right now, obviously, we know that there's a lot of images that get used around the internet that just aren't credited in the person who took that image. It's just really easy to copy an image and then use it however you want to. So there's a lot of money being lost from the people that are making those purchases. So Kodak Coin is really interesting to me in the solutions that they're developing in that space. So
it's not taking pictures, it's more rights management for pictures that are on the web?
Yeah, and that could be applied to anything, not just a picture, but yeah, so if there's content that's on the web, who owns that content? How can you maintain a record of where that content came from? And that's what their technology would be doing.
So just to break it down, so if I'm a photographer and I have a portfolio of pictures, I could put them on the Kodak blockchain to make them available for people, and they would pay me through that blockchain for using them,
because
and we'd have a record.
Would be recorded. So if somebody pulled that and if they tried not to pay you, it would be clear in the blockchain that it came from you. So right now, one of the biggest problems is keeping track of that. It's how do you organize that number of photos that are available on the internet and the many, many different ways that they can be used. So this creates a solution that I think is really interesting.
It doesn't really require a middleman, right?
No, it's decentralized. Well, it's centralized with
Someone
Kodak.
needs to find those images.
Yeah, exactly. But it's more distributed. And if their blockchain technology can be fast enough, then it could be more efficient.
Got it.
And you get paid in Kodak coins, right? It's not
yes.
dollars. Right?
Yeah, I believe it's Kodak coin, which then converts into dollars, but that has to go through Kodak.
Right. One of the interesting questions for me in the whole space is you've got over 1,000 companies that have issued their own token or coin, and I think those are interchangeable terms. I don't want to keep track of 1,000 currencies. I have enough trouble keeping track of one. So do people really think that ultimately we're all going to have to manage a dozen or 2 dozen coins in order to use these blockchains, or will the idea of interoperability or being able to use a single coin or being able to use coins across multiple platforms ultimately win the day? Because it just seems unlikely to me that we're all going to want to manage that many digital tokens.
I'm in that camp. I think this is going to be a bit of a winner-take-all. I think they use the term maximalist in the crypto world, where there's Bitcoin maximalists and Ethereum maximalists. I think for that very simple reason that most of these ICOs are in real trouble because of the very simple fact that consumers only have so many slots in their life for new categories of entertainment, right, or usage. You have Netflix and maybe one other thing they watch video with. You have iOS and Android. You have Mac and Windows. So I don't think this plays out any differently. There may be 2 or 3, I think, cryptos in terms of interoperability. Highly dubious on the technology front. I've not seen any good interoperability solutions. And one final big hairy reason: the main way consumers get crypto is through a company called Coinbase. And Coinbase has as many customers as Fidelity. And Coinbase sells Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. And I don't know if you could found Coinbase today because of the regulatory situation. Were founded a while back, totally legitimate company, totally straight up. And as long as there's regulatory uncertainty and one primary source where consumers can buy crypto, I just don't see how anything else takes off.
I would say that in a way we're kind of living in the same world. If you think about all the different loyalty programs that you have, you've got American Airline miles that you can only earn and redeem in American, United, and all the different grocery stores that you go to. So in my mind, crypto is almost very similar if you think about kind of traditional world and the new world. And so we, in a way, I think, used to doing that, but I think the utility of it, and I mean, I can actually convert my American miles to United miles. Do I ever do that? No, because it just takes so much time and so much effort. So I wouldn't be surprised if we have, this numerous coins, but again, it's more of a becomes more of a loyalty program. That's the way.
I mean, again, we kind of going back to then what's the point of doing it on crypto, right? If it's just loyalty programs, I think there always needs to be a litmus test of, is this better with crypto, with blockchain, than with a database? Because most things that are ICOs would be better with just on a database. Loyalty programs, far better on databases. Let's just put it on a database. Super hardened technology, well established, extremely fast, extremely cheap. Why would you add this friction of having to pay a gas fee, which, every time you do something on crypto, it costs something, right? And it's super slow. So basically, the blockchain is a super inferior database, and its only advantage is that it's immutable and public. Those are the only advantages. So depending on what it is, that's why it makes good for money, right? Like Bitcoin. It's very clever, right? Because money is simple. All Bitcoin keeps track of is who owns the Bitcoin. That's all the Bitcoin blockchain keeps track of. And that's a little bit flummoxing for people at first. It's like, wait, so the whole purpose of this is to keep track of who owns it? But that's why it makes good money. The killer application of Ethereum is ICOs, which, a lot of them are just securities or proxy securities. They call them utility tokens or whatnot, but a lot of them are just kind of a proxy to a Kickstarter or a IPO. And that's, again, kind of just a form of money, right? It's just a kind of keeping track of who owns what.
Let me bring you back to my question, Randy. So can you tell us about, including your company, hopefully, 1 or 2 projects that you're excited about in the entertainment space to give people a sense for how it's being applied now and how it might be applied?
Yeah, I am really interested in what's called the ERC 721 token. And not to get too technical, but there are ICOs, which are ERC 20 tokens, and they're fungible, meaning they're like money. I give you $1, I keep $1, we trade dollars. Nobody cares who has what dollar. MP3s are fungible. I give you an MP3, I keep an MP3. Nobody cares which MP3 we have. Whereas CryptoKitties are non-fungible. If I give you a CryptoKitty, I no longer have my CryptoKitty anymore. And if we trade CryptoKitties, they might be worth the same dollar amount, but they're different, much like pieces of art, like a Jackson Pollock and a Picasso, right? you're worth the same amount of money, but if you trade them, you no longer have that. So then you take that concept of non-fungible technology, basically digital scarcity, but unique digital scarcity, and you start applying it to entertainment. And in our case, we're working with a licensor where we're going to have a collectibles game like CryptoKitties, but with an actual consumer brand. In our space game, Crypto Space Commander, we're not working with the entertainment industry on that one. That's just a first-party title. But just to give you an idea why this matters is our space station, our largest item in the game, sold for $50,000. So games it's changing how a game can exist. Instead of a game being just a $60 sandbox thing you sell, it can be the components of the game, and different people will pay different amounts depending on how much they care about it. So there's been 6 $100,000 sales, now 7 with $140,000. But CryptoKitties has had a smattering of $50,000 sales as well. And there's a lot of $500, $600 CryptoKitties out there. So you then apply that to, I think, entertainment, any brand with affinity. So I think any brand with affinity out there has an opportunity to have a video gaming and merchandising play in the crypto space.
I want to unlock this idea of digital scarcity a little bit and talk about this. And you said somebody spent $50,000 on a battleship?
Yeah, I don't know, space station.
Space station.
Not a battleship, space station.
A space station. Sorry.
No, it's a fantastic space
how
station.
dare I?
And on top of that, there's somebody spent $25,000 on a ship, and I believe it was $12,000 on another ship. And our average player is spending about $130, which is also quite high for an average consumer spend.
Right. So I want to pierce into this a little bit, this idea of the digital life.
Yeah.
And how important that is to digital natives, people who have grown up in a digital world, because it's a little bit alien to me, having grown up not in the digital age. But I have kids who are now getting to the point where they can buy their own stuff, or with my money. In a digital world.
With your crypto.
With my crypto. I don't actually own any crypto. But for somebody whose whole life has been in part in a digital world,
yeah,
their digital life is really important to them.
Digital natives.
Yeah, whether they're on Instagram or Facebook or they're playing in a game, for them, that time in their day and that time in their life is an extremely important real time.
That's right.
And I noticed with my son, who's 14, I think one of the things that's exciting about it is I have nothing to do with it. I can't tell him which game I can tell him which game he's going to play, but when he goes to play Fortnite, he's doing his own thing.
Right. And
I don't really know what he's doing. I've watched the game. I'm okay with the game. And I think that cuts across a lot of digital platforms. And frankly, you can be better looking, stronger, more successful. It can be a pretty cool way to spend your time, right? And maybe for some of us of a certain generation, we don't really get it. Is that happening? Is the blockchain that on steroids? Is the blockchain a way that we're pushing out into a digital world that younger people innately get and some of us don't?
So here's, I think, the loop here. I'm a child of the 80s, right? 80s was peak physical collecting. It was baseball cards. It was Pokemon. It was Garbage Pail Kids, and people liked collecting, right? Then through the 80s and 90s, the digital revolution happened, changed all of our lives. So all of a sudden, I'm copying software with my friends, and nobody really cares what the software is, and playing video games, and all of a sudden, my life started shifting more digital, right? And then the internet was born, and I don't even have physical discs of software anymore. Like, I just have MP3s, and I'm streaming music and movies off Netflix. So we've had 30 years of intuition that digital is not scarce. Like, it just basically, it's not scarce because it wasn't scarce in the past. Bitcoin invented digital scarcity, and it's taken about 8 years for that to really sink in, and now Bitcoin has a $150 billion plus market cap. That proves that has sunk in. Like, people now believe Bitcoin is digitally scarce and that it has value. The rest of the other cryptos altogether have another $50 billion in market cap, so $300 billion total. And then the other part of it is the physical collecting was decimated in that whole phenomenon. Your children don't want your tchotchkes or your baseball cards. If you try and give your old box of baseball cards to your kid, you'd be like, get that garbage out of here, go sell it on eBay. But collecting is a human nature, right? So kids do collect this stuff in games, right? They'll play NBA 2K and they'll collect things in that game. Those are all just database settings in games, right? Those are all just sitting on the servers. And the companies are kind of getting away with it right now because there's never been another solution. So that Activision or EA can kind of get away with just saying, oh, you really own that Topps Bunch baseball card. You really own that in the app, but it's on a database here. Trust us. Well, as people become more sophisticated about what is true digital ownership, like I truly own my Bitcoin. I truly feel like I own my Bitcoin. Why? Because I can truly sell my Bitcoin. You can't truly sell your digital things you own in NBA 2K or your Topps Bunt app. So I think as that sinks in, it actually unlocks the max dollar amount those collectibles can go for digitally, right? The max amount they can go for. Right now it's like, $25, or maybe they'll try and do a loot box and get your kid for $500. Well, CryptoKitties and our spaceships are selling for tens of thousands of dollars because it's unlocked. Now it's more like a physical collectible, like a piece of artwork, or physical collector. I think it's more similar to physical in all its characteristics than it is digital.
And the consumer has bought into it.
And the consumer's bought into it. The consumer that has bought into Bitcoin, who believes Bitcoin has an inherent value, has now bought into these as digital collectibles.
So Alex, you come out of a more traditional space. I think investment banking hasn't caught up to the crypto world. I think a lot of institutional investors haven't caught up to the crypto world. Two questions. One is my original question. Do you see, so we've heard about social media applications, game applications, sort of digital rights management and pictures, I think is what I would call Kodak. Do you see this in some other places like music, television, movies in terms of projects? And when is the more traditional financial marketplace of gatekeepers and service providers and traders going to get hip to this the way the crypto community is?
Right. Actually, if you look at the money that goes into blockchain development, financial services firms actually outspending everyone else, I would say 3 to 1. Whether you look by the number of projects or you look by the total dollars, which is counterintuitive because you don't really see much talk out of the financial community about some of the exciting blockchain projects, but in reality, they're spending the most money on blockchain and crypto. I think some of it has to do with the fact that...
You mean on actually applying the technology to their business?
On trying to figure out what kind of apps they can move to blockchain.
Right.
Right. There is, you look, again, there's plenty of stats out there, but it is an interesting phenomenon, and I understand why it makes sense because how blockchain got introduced to the world was through Bitcoin, and the payment settlement system, that is really what financial services are about, and trying to understand how that works in their world. Can they make this to be a private type permission-based blockchain versus an open-ended database? So there's a lot of money going in there. I do think
Jamie Dimon famously said, Bitcoin is a fraud,
and then he reversed it.
But we're going to spend billions of dollars on applying the blockchain to payments.
That's exactly right, yes. And I think he came out and said he was wrong still on his initial statement. So.
Wow, I haven't heard that.
So, but you said, right.
A banker who said he was wrong.
And
Mark the date.
I'm holding on this until later. So, and I understand why financial services are in a way behind, because there's a lot of regulation that we are subject to, and no one really wants to take a risk. And I don't think banks will ever do. Well, maybe I shouldn't say that, but I don't think ICOs is something that, for example, investment banks would really get into, just because of all the overhang and risks that are associated with that. So again, as a person from a more conservative industry, when I think about blockchain and things that seem interesting to me, I just look at what works, and frankly, for me, it's really Bitcoin and ICOs are sort of the only things that so far I can point to and say, okay, this is what blockchain, where blockchain actually applies and where it works really well. But I think ultimately we're going to transition to some of the more creative applications of blockchain.
Well, speaking of transitioning, so Kinsey, as I alluded to in the PowerPoint, one of the big issues is have dozens or hundreds of these companies done illegal securities issuances. in the form of selling their tokens to the public and not registering them in the U.S. or being exempt from registration. The legal remedy, if you do that, is called rescission, which means the person who received the coin has a right to all of their money back. If the coin's gone below the issuance price, that's a pretty substantial problem for the issuer, in addition to fraud remedies and all the other things that people look at. The regulators are grappling with this as we speak. As a matter of fact, the CFTC, which regulates commodities, the chairman came out last week and said we're going to give more clarity together with the SEC, which regulates securities, sometime this year. So the industry has really been waiting for this kind of guidance. It's not clear that anybody's going to get a free pass for their past behavior. How do you think this all plays out? Are we going to see companies get swamped in regulatory and legal issues and disappear as a result? Is it going to be a soft landing for the industry? Are the regulators going to say, we don't want to kill this industry, so we're going to regulate with a very light touch, which they haven't really said so far and don't typically do? How do you see it playing out as a service provider that's on the track of helping companies do securities offerings with tokens? When you look out, I know you talk to a lot of lawyers and a lot of players in the space. What do you think is going to happen?
Well, there has been this, I would say there was this wildly optimistic attitude from a lot of people in the crypto space, starting that it's like slowly becoming less and less optimistic. But 6-9 months ago, people would say, well, you know, they can't, they're not smart enough to figure out what we're doing, or we're too big, we're going to be too big for the American government to take down. And that was the sort of thing, it was seriously that people were saying at panels like this, not in places like this, but that was the attitude. And then you start seeing, I think the ones that got the soft landing, they already got their soft landing. And that's maybe in December when you saw Munchies get shut down, and all they had was a cease and desist. They had to give back all the money they had just raised, which was not even, it was, I think, maybe $70,000 or some small amount of money.
So Munchie was a restaurant company with an app, and they did an ICO, or were in the midst of doing an ICO, and the SEC came in and said, you're offering securities, stop doing it, you're not registered, and give the money back and stop doing it. They didn't bring an action against them to really enforce with penalties. They just said, stop doing it.
Exactly. So they said, stop doing it. They had already said, we don't want anyone to do this. Companies kept doing it. There was this, the big letter that came out in July that stated a lot of ICOs are probably securities. There's this big dip in the amount of ICOs. The number of ICOs have been climbing. And in August, you see a big dip. That people were holding off. They were concerned. Then I guess they regained their confidence, talked a lot to each other in a bubble, saying, no, we're bigger than the government, we can do this, and then you see more launching. And then it was, I think, January where all the subpoenas came out. It was like 80 subpoenas. And all of these companies are starting to have serious conversations. To answer with the SEC, to answer your question about do I think that the SEC will crush the industry or say we don't want to crush this industry, so we're going to go soft. I don't think they want to crush the industry, but I think there's enough of big players that have already made their conversions, so they've had the money that they needed to have to do the rescission, make the change, deal with the SEC, and then have already reissued more compliant offerings. And T0 is a really good example of that. They offered a SAFT, and they launched that in the fall. There were some, it wasn't just blatantly.
SAFT is a simple agreement for tokens. It's similar to the SAFE, if you're familiar with that, which is a simple agreement for equity, and companies have been using this SAFT contract.
Yeah, so the SAFT contract is the idea that the tokens are in the future. So they don't have any tokens yet. They don't really define what the token is, but you can buy it now, and then they'll tell you what it is really later. They'll give you all the definition of that later. And that was the strategy companies were using because they felt like there wasn't enough clarity on what they were going to be able to get away with. So they said, well, we'll register it as a security. We won't say what it's doing until we know more about what we're going to be allowed to do. And then we'll just take it as far as we're allowed to later. But that was problematic as well. The SEC doesn't like, or made a statement about not liking SAFs either. Since then, they actually have done some approvals on certain types of SAFs, the way that they're structured. I don't think it's the SAF itself that's a problem. It's how much definition you provide to what the future token is going to be. So again, to go back to the answer to your question, I think that there are plenty of large companies, enough large companies in the space that have the ability to overcome and to afford the cost of complying with regulation, even after having made a couple of mistakes, and we're seeing that happen now. T0 shifted over, and now they offer an actual safe with equity rather than a future token, and that's what they're currently offering on Start Engine, and that is something that I think you'll see the big companies, the big players with the real technology, with heavy-hitting investors behind them that believe in their technology. I think those people, those companies will make it through, and in that way, even if many of the other companies don't get past it, the industry itself won't be crushed.
Well, I think one of the interesting. Sorry, go ahead.
Quick
Go ahead,
on this. I think something that's not people don't really understand. I know there's like people in here who have, clients that are in the entertainment business or they work for, studios. You don't need your own blockchain to do a blockchain project. This is kind of one of the biggest misconceptions, I think, right now going through the industry. And we're finding this, that you don't need to do an ICO to do a blockchain project. Like, you can build a blockchain project on the second largest blockchain, which is called Ethereum. And Ethereum is, been around, super reputable team, almost a guarantee. They're sold on Coinbase. All of our games are built on the Ethereum blockchain. CryptoKitties is built on the Ethereum blockchain. CryptoKitties did not do an ICO. CryptoKitties does not have its own blockchain. You can think of the blockchain like the operating system or the kernel even of the operating system. And again, I get why people do ICOs. They do it because it raises money. And you kind of have to say, well, I have a new blockchain, and that's why I have to do the ICO. But that's like building a new operating system every time you make a video game, right? You don't do that, right? You want to build a video game, you build on Windows or Xbox or PlayStation. So that eliminates a lot of the regulatory risk. You can do blockchain stuff because the last thing you want to do is spend a couple $1 million building a video game, and then it turns out you had a security embedded in it. And you just might be the guy who gets to unlock, the regulator misses lunch, he's rifling through his papers, he goes, I'm just going to pick on Munchie or whatever idea. Yeah. They're just going to pick on that, right? And if that token is embedded in your project, now from the ground up, your consumer, you're asking a consumer to commit securities fraud by saying they have to use this token with it.
Also, we're focusing on the regulators, but let's not forget there's an entire plaintiffs bar out there that is in the business of making money by suing companies. They don't have to wait for the SEC to pick you out of the pile. So they can pick you out of the pile themselves.
So if you're a legit brand and you want to play it the safest, I would build on Ethereum. I'm not on the Ethereum Foundation. I don't have a horse in that race. I own some Ether, but nothing to make me say this. That's the safe bet right now. If you're an artist or a consumer brand and you want to build on something.
Let me come back to this idea of digital scarcity, because I mentioned it in the presentation and we've talked about it a little bit, but to me that's one of the biggest ideas, is the ability of the blockchain to create digital scarcity, because the entertainment industry, digital really hasn't been kind to the entertainment industry in a lot of ways. It has created winners, but it's created a lot of losers too. I would argue that pricing every song at 99 cents for the last 10 years hasn't necessarily been a good thing for artists or recording companies. And the ability to download movies illegally and songs illegally has obviously been a nightmare. And Randy, you had a company that combated that quite ingeniously, I think. Am I right that digital scarcity, that the blockchain can bring digital scarcity to help bring it to the entertainment industry, and that's really one of the things that should be focused on here?
That's the hallmark thing. I mean, that is the only purpose of blockchain is to create digital scarcity. Otherwise, SQL databases work fantastic. They're fast and cheap. So I think that is, you look at things, and I think that's why collectibles is a very intuitive one. It's a nice intuitive thread, because everybody understands that scarcity is what makes a collectible. I got Superman's cape, right, or this red cape, and I say, this is Superman's cape. Well, what do you have to do to verify that Superman's cape? You go through and you do a chain of authenticity, right? You go back and look at all the Christie sales to say, okay, wow, okay, so over the course of 12 different owners, it can be traced to where Christopher Reeves wore it on the set of Superman. Well, that's exactly what the blockchain is doing. It's tracing chain of custody. You can see who has owned every Bitcoin since the beginning of Bitcoin. It's just a big hash of numbers, but it doesn't mean anything visually. But you can at least verify a chain of custody. It's the same thing with CryptoKitties. In 1,000 years, if the internet's still around, somebody will be able to trace who has owned those Gen 0 CryptoKitties.
I have an example knocking around in my head, and tell me if this is something that makes sense. Let's say a musical artist said, I'm going to put a performance on the blockchain, and it's only going to be accessible X number of times forever.
Yep.
Nobody's going to see it. It's going to be a unique performance, maybe a unique song. And the only way you're going to get to it is through this blockchain, and that's it. There's only going to be a scarce number of times that people are going to be able to see the performance. Or the thing, whatever it is. Is that a way to think about creating digital scarcity on the blockchain?
100%. So, Wu-Tang Clan famously put out their last album, and they sold one copy for, I think, $1 million or something. And
that nutcase ended up
to a nutcase. But it creates these new models where you can put out, say, a first edition. You can still put out your normal 99-cent songs or put it on Spotify, but you could create first editions of things again. Again, it just kind of goes back to tracing authenticity. And so people who aren't really into this stuff are like, well, why couldn't I just make an MP3 copy of that? Well, you can take a screenshot of the CryptoKitties too, but you don't own it. You can go take a picture of the Mona Lisa and have somebody reproduce the painting pretty accurately. You don't own it. And this, to people who are fascinated and are believers in digital scarcity, the blockchain is part of the piece of art. Like if you don't have the blockchain component, you don't really own it. It's all just forgeries and copies.
Right. I was reading Peter Guralnick's 2-volume biography on Elvis Presley. If you haven't read that, it's really a fantastic read. And one of the points that he makes in there is that around 1948 or so, 2 pieces of technology came into existence that really changed music. One was the 45 RPM. That was a record. You had a needle that went around and music came out with a song on one side and a song on the other. And portable, easy to buy, cheap record players. And what that did is it took music out of the living room where the parents were in control of it and everybody listened to it together, and it brought it into the kid's bedroom where only the kid was listening to it. And the difference between the parents' music and the kids' music became a divide, and the kid was in control of the music. Are we in a similar place now with this technology where we're sort of creating a generational divide and a divide between people who are using and people who are not using, and for all intents and purposes, atomizing people's experiences even more than they're atomized right now?
Yes, I mean, I think that the divide is that we have an intuition around digital that it's not owned, right? So when Microsoft started selling Windows software back in the 80s, they didn't want you putting one copy of Windows on 100 PCs at the office, so they invented a digital license. And people were like, oh, that's the only way to get Windows, so I get a digital license. And from there, every software company, everybody who produced software going forward just did a digital license, and the consumer just kind of accepted that was the way things were. That you own your iPhone. I own this. I don't own iOS on here, right? I can't sell iOS. I can't improve iOS. If I told you you don't own your Ford car, you can't put a Chevy engine in your Ford, you can't change the paint color, you can't improve it, you can't make it faster, and you definitely can't sell it, you'd say I was crazy. But that's what we've come to as an intuition. I think that's a false intuition. I think it's basically it's almost like we've just seen it so many times, and the older you are, the more you've seen it, that it seems like that's the way things are, whereas a kid who didn't grow up with 30 years of digital not really owning anything, or aren't just blindly clicking through EULAs, every time, you don't just not own it, they make you agree to terms over and over and over again. It's like the worst kind of rental. It's like a rental, like you're renting your apartment, but every 3 months you got to sign a new rental agreement or lose your apartment. And I think as that diffusion of the difference of owning and renting goes through, and I think people will pay more to own, just like you pay more to own your house versus rent an apartment.
All right, I'm going to do a little bit of a pivot and to tax and give Shane the floor for a minute, and then I'm going to come back and ask the panelists to predict the future as a way to end the 4 questions. So Shane, do you want to talk about tax aspects of owning cryptocurrencies for a few minutes, and then we'll hear these predictions.
Okay, sounds good. First, I wanted to share my favorite fraud story, which is I read an article that a guy in Jersey was arrested for selling $1 million worth of Bitcoin, and he was selling Chuck E. Cheese tokens to people. So that's important to remember that for tax, it's considered property, not currency, and it's intangible property. So if someone tries to sell you a Chuck E. Cheese token, it's not a Bitcoin. So in 2014, because this is a new technology, there wasn't any guidance before 2014 in terms of what is the tax treatment. And in 2014, the importance of this ruling that was issued by the IRS is the IRS basically issued guidance and said that the convertible virtual currency like Bitcoin is considered property for tax purposes. It's not considered currency, and that means that there's different rules that govern currency versus just regular property. So the importance of that is to remember that anytime you have property for tax purposes, if you receive property, you have income equal to whatever the value of that property is. If you dispose of property, you're going to either recognize gain or loss depending on what your cost was, your original cost of that property. So every time that there's a Bitcoin transaction, it's an income recognition event or a loss recognition event. And the one important thing to note as well is that the notice did not cover token-based types of blockchain, so it was really only focused on Bitcoin and anything that can be convertible to cash. And so the first step in determining what your taxable income is going to be upon a disposition is you got to determine what capacity are you holding that property in. So general tax principles are pay a lower rate, try to use as much of any loss that you can use. And the reason why the character is important is because if you're holding it as an ordinary asset, meaning maybe you're a day trader and you're running your trader business by buying and selling Bitcoin, that you're not holding it for investment. And in order to have a capital asset, you have to hold it for investment. And the benefit of having a capital investment is when you dispose of it, if you've got gain, you're going to pay less tax. The downside to a capital asset, if you sell it for a loss, you trigger a capital loss, and you can't use that loss to offset your regular income from your wages and all that. You're limited as to you can only offset your capital gain except for a certain amount of ordinary income per year. So determining how you're holding it is important for determining the tax character. So if you're a day trader, something like that, where you're buying and selling Bitcoin, and that's your trader business, it's going to be ordinary income. You're going to have ordinary loss. If you're holding it for investment, and you hold it for more than a year, you'd be eligible for lower tax rate on a sale or disposition. One of the interesting things that commentators have raised is that people are using it for currency and everyday use, and you go to buy a product with it, it's effectively like a barter exchange because it's treated as property for tax purposes. And the interesting thing about that is if you're holding it as a personal property, you can't deduct personal losses. So there's a question right now, if you're using it to buy everyday products, if you trigger a loss, can you take your loss, or is that a personal loss? And then I guess the other point to note here too is that if you're receiving Bitcoin as part of a trader business, you're going to be subject to self-employment taxes or employment taxes if you're an employee and you're getting paid in the form of Bitcoin. In terms of tax basis, that's the measurement as to, like, when you receive it, you recognize $100 of income. Your basis is $100. So if you later sell it for $200, you're going to have $100 of gain. If you sell it for $50, you're going to have $50 of loss. And there's been some questions about if you're a miner and mining Bitcoin, whether or not, I think the notice covers when you're considered to receive income. And as soon as you mine the Bitcoin and receive it, you're treated as having income at that moment in time. This slide is basically just covering most of what I just talked about in terms of recognized gain or loss and determining the character and your rate, and also the ability to use your losses. One thing that I found interesting earlier that someone was mentioning is people trading CryptoKitties, or if there's multiple different types of coins, if people are trading coins. Because it's property, anytime you dispose of the property, you've got a recognition event. Prior to the new tax law, there's a section 1031 which governs like-kind exchanges, which does carve out certain types of intangibles from that. And the benefit of that rule is if you have like-kind property or that's the same kind of property, you can exchange it, and if it's of equal value, you don't recognize any gain. But under the new tax law, that has now been limited only to real estate. So I guess an interesting tax question then is that if you are trying to harmonize all these different types of currencies, if people are cross-trading currencies, each of those types of trades might be taxable. And then I guess some other interesting issues that come up on the tax side is if as blockchain evolves and it becomes more complicated to mine, people are pooling resources, and they're obviously doing that to generate income. And then the question is that a partnership, and do those people have to file a partnership return? And then in terms of reporting, I think one of the bigger issues is enforcement in terms of tax enforcement. And people, I think the concept of Bitcoin originally was on the concept that people could have, discrete transactions. But now that there's exchanges and whatnot, the IRS Criminal Investigation Division Director has made comments that they do have abilities in place where they can track these exchanges and track people down if they're not paying taxes. And there was a Coinbase case last year where the IRS successfully got a subpoena issued to Coinbase in order to collect information to track down people that weren't reporting their taxes. And then just along those same lines is because it's property and all these types of transactions are taxable events, that if people aren't reporting those transactions, that they're potentially subject to penalties and interest on any taxes that they don't pay. And if they're not reporting it, then the statute of limitations stays open and it's not closed for a particular year. So on the tax side, the general principles are just, since it's property, apply general tax principles. But I think the bigger issues are enforcement and also various situations like miners teaming up, making sure that whether or not they have to file a partnership return. So there's a lot of interesting questions that are kind of derivative of the whole blockchain concept.
So thanks for that, Shane. So predictions. I'd like to ask the other three panelists, and then we can open it up for questions. In Web 1.0, Web 2.0, we saw gigantic disruption. We saw gigantic companies created, whether it was in search or social networks or old line industries like retailing. If you had to predict, which you do, an industry segment that's going to be disrupted, hopefully in the entertainment business, but could be outside, or a company that you see that you think is going to become a gigantic company, if you're willing to actually place your bet on that right now. What do you think, Alex? You're ready to go.
I think I'll make an easy prediction, and then I'll try to answer your question. One is, blockchain is not going to solve all the problems that it promises to solve. I look back and I think of all the different intermediaries that got eliminated as part of the Web 1.0 generation, and then you look at the new intermediaries that got created that are a lot more powerful and actually taking a lot bigger share of wallet. I think before, to generate $100 of sales, you put an ad in a Yellow Pages, cost you $10. Today, to generate the same number of revenue, you probably need to pay Google 10 times that. So just wanted to say that. But then something that I think is fundamental, and that's changing, and picking up on some of the earlier discussion, is the idea of itemization and people looking specifically for that piece of, whether it's content or piece of information. And I think that will continue. Now, why subscribe to satellite radio when you can do streaming and you actually can pick exactly the songs that you want to listen? And I think it will continue to go down that path. And even now, I look at my kid; he only listens for 10 seconds of a song. You know, why pay 99 cents for a full song when you can pay only for 10 seconds of the song? And I think blockchain is set up perfectly to, maybe not yet, but to the idea behind, I guess, blockchain is to enable that kind of micro transactions, micro payments, micro metering. So I think that will happen. So I would place my bet on that technology.
Micro metering. Randy?
Well, I think every brand with any sort of consumer affinity will start looking at blockchain over the next year as another way of selling a product to a consumer. So from a merchandising as simple as a merchandising standpoint to as sophisticated as a video game. If you're sitting on a brand with affinity, you know, be a celebrity or, you know, something like, you know, Star Trek or, you know, Transformers or anything branded with affinity, blockchain, and in particular blockchain gaming, provides a brand new, a completely new revenue source that doesn't cannibalize any of the existing revenue sources. And in that way, much like when the iOS mobile revolution came around, there were companies like King and Supercell that saw the way a mobile game should be designed and played, and they became massive companies. There will be the same thing that happens in the blockchain space. It won't be sort of the traditional merchandising or the traditional gaming companies that capitalize on it. And I, you know, selfishly, you know, if anybody has a brand with affinity in the room who wants to talk about how to make some money on it, definitely come and talk to us about it.
Kenzie?
We've talked a lot about digital rights management, but so in addition to thinking that this is going to be a major technology for that specific industry, I think to go a little bit deeper into it, I think that change will enable what we already see with the prevalence of user-generated content becoming content. I already know people, adults who don't watch TV but will spend hours scrolling through Instagram, meme feeds, and viral videos. Obviously have an opportunity to make a lot of money, but I think we'll be seeing I think we'll see the normalization of everybody getting paid a little bit for their content. So instead of having to sort of climb the ranks to become an influencer who then gets sponsorships and can make a little bit of money because they already have so many likes, I think the likes and the views themselves will be something that can be profitable for people who are spending a lot of their time creating content.
Interesting. So that's the end of our panel. Are there any questions that people want to ask? And Leo, do we have the ability for people to ask questions from remotely, from the web as well? Anybody in the room? Yeah, go ahead. So the question was comparing and contrasting the Ethereum platform and the new EOS platform for blockchain companies.
Yeah, I mean, you know, EOS is one of the more well-respected ICOs out there. They've done a year-long ICO, raised, I believe, $2 billion. I might be off on that number. And their promise is to have a more scalable, faster version of Ethereum. It does the same thing as Ethereum in terms of a Turing complete, which basically means a computer that can do computer stuff, but in a more scalable way. So CryptoKitties kind of famously, when they were at peak, really strained the Ethereum network. I think a third of the transactions on the Ethereum network were people buying and selling CryptoKitties. There's been several ICOs that have strained the Ethereum network, so the promise of EOS is that it's going to be more scalable. Of course, the Ethereum Foundation's not sitting unaware of this, right? They're not sitting there on their hands either. So there is going to be this, quite bloody battle, I believe. It's a platform battle, right? I mean, you, of course, want to be the platform. You'd much rather be Windows than the video game on Windows. You'd much rather be the iPhone than King. I mean, it's great being King, but it's much better to be Apple, right? So there's going to be a bloody platform war, and they will be working and really pushing the tech forward. I'm excited that EOS is launching, and I think the one downside, again, I kind of go back to this, not even a technological question, it's more of a consumer adoption question, and that is kind of the Coinbase issue right now for me, right? If I'm going to put $2 million into a project, I got to feel like I can get customers. And again, we as a company are not wedded to Ethereum. We will put software on EOS or whatever platform consumers are going toward. But if consumers can't get a hold of it easily, or if there's a overhang, it might be a security because regulators won't decide on this and I don't think they will. Quite honestly, they've been saying they're going to decide on this for a long time. I think we could see 5 years, 10 years go out and we don't ever see clear answers from regulators.
We actually think that there's a document that's being worked on between the regulatory agencies.
Well, you would know more than I would on this topic. So. But I have to, as a businessman, go under the assumption I as a businessman can't say, well, I think the government's going to do this later on in the year. That's just not practical as a businessman. I got to work with the facts I have right now, and the facts I have right now is a consumer has to get EOS, they have to go on Coinbase to get Ethereum, and then go on Kraken to get EOS. So there's a two-step process. On that, every step you make a consumer go through, you've narrowed your funnel.
Right. Mm-hmm. Any other questions in the room? Or yeah, go ahead.
As many people blockchain
yeah.
Especially in the question. And you're at the very beginning. There's no history of what depends on what.
Yeah, you own the first CryptoKitty or something. Yeah.
Yeah, right. So and then that information immediately, I guess.
Yeah. Well, this is it's a good question. This is the core of what blockchain is. It's keeping track of the chain of custody. So Bitcoin is the example, right? Like it would be a big problem if I could say I owned all the Bitcoin, right? That'd be a big problem. Bitcoin would instantly lose all its value. The reason I can't say that is you can just go to the blockchain and use a block explorer and say, oh, here's who's owned. This one owned it. This one owned it. Now, I have my wallet that I say I own all the Bitcoin. Well, it's very easy to check to see were you in that chain of custody. So I think it's a lot more interesting for 100% digital things right now to me. Like there's a lot of companies that are talking about like tying physical artwork to the blockchain. For me, it's there's going to be complexities there of like, well, I don't know, like you still have to have a central place where somebody's got to be like, this is the official, like Christie's or something. This is the official validating. Whereas if it's 100% digital, like a CryptoKitty or our spacecrafts, then it's all just kind of baked into the original genesis of the artwork.
Wikipedia does a pretty good job as an open source encyclopedia of delivering relatively accurate facts.
No, I mean, I think that's a great point. Is that blockchain isn't the solution for decentralization in all cases, right? Open source software has existed for a very long time. Linux has been around for a very long time. It's a very effective way of democratizing. Nobody controls Linux. If you want to take Linux and add a bunch of stuff yourself, you can do it. So I think that's an important point, is that blockchain isn't the sort of solution for all things.
Also say for everybody in the room, in my opinion, the technology is dense and complex. The solutions that people are articulating don't always make sense. They don't make sense to me when I sit across from them, and I've concluded after practicing law for 30 years that if you can't explain your business to me in 10 minutes, either you don't want me to understand it or you don't understand it. And that happens in this space too frequently. So if your head's sort of spinning with business models, you're not alone, and it doesn't necessarily mean that you have a problem. It means the business models don't. It might mean the business model doesn't make sense, or people don't understand the fit between the technology and their business model. They just love the idea of the blockchain. We're raising a lot of money with an ICO.
I mean, again, my sort of simple test is like, would your service be better with a very slow, expensive database? Most of the time, the answer is no. You know.
Other questions? Yeah.
Photos of a mistake or a news article, or when I was in Disney years ago, we saw a lot of sending digital assets all around the world, so production companies and distributors and everything. You know, what happens to that asset? So where the blockchain thing is, because it's a distributed ledger, that you can check the veracity of that asset around the world pretty close to real time to the point you know where it's coming. That's what this is, right? It's not about necessarily crypto keys for the Walt Disney Company or an original piece of art that I'm creating on and sell to somebody. You can replace your PDF with a much more robust worldwide PDF. Some kind of standard, you can track it. And that's why I think it's very orders of magnitude powerful.
So I guess what I'll
Actually, one of the things we're doing with basically so we're doing what we see has done. But I would add the element of being able to provide that in order to not only impact but also to give people the opportunity to, look around back and source things like that.
So there's no reason why you can't make a database public. There's no reason why you can't have a shared database. That's what Wikipedia is. The next layer of why blockchain is important is it's immutable. The history is immutable, right? So I think for like a situation like the movie studios wanting to keep track of stuff for their movies around the world, if it's all behind their walled gardens and it can be a shared database, that software.
But it's not, because it goes to all sorts of third parties, and it's not really even asset, it's tracking them. Right? That's like that you have to send it to production companies, distributors, top people that make copies of the top. So it's not the file itself. To your point, really, it's the tracking of that file. Because I always know where it went in the chain of ownership from when it left Burbank and went to the distributor in Malaysia and all the stuff in between, because it keeps checking back against it.
So the question is, in that industry, is it not like that because there's never been a database solution to do it, or is it not like that because of the bureaucracy in that industry that prevented it from a system? But would it be easy to get everybody on the same blockchain to share that information?
It is, because I can append the blockchain code tracker and everything asset, and like you said, I can look at it on the store anywhere you want.
Right. So Walt Disney isn't going to allow they're not going to be willing to let their information, their facts about who owns what, to live on Netflix's database that Netflix controls, because that wouldn't be safe for Walt Disney. So the idea is you have to have one central place that everybody can trust, that you can feel completely confident that it's unbiased, it's just tracking, and that's something you haven't seen before. But I think what comes back to her question is, how do you verify the existence of something like who owns Snow White, who put Snow White on the blockchain initially. And what's great about that is that you can integrate verification onto the blockchain. So obviously Snow White, I believe Snow White still is owned by Walt Disney. So you can build that in. So by integrating with blockchain technology, it would have to be Disney that would put it on the blockchain. You couldn't just go in and say, oh, by the way, I own this. and that's part of the transition. Right now, Snow White's not on the blockchain, so the only way for that ownership to be listed is for it to come from a verified source.
But also there's like so many in the future that they're going to get when you establish on the blockchain. Somebody owns the work. Somebody gets the royalty somehow right now, I assume family or whatever. So when that gets established for the first time, eventually probably over the world, it matters because then everything will go back to that first record.
So exactly, and I'm not an expert in art dealing, but it's my understanding that there are processes to becoming a certified art dealer, and you have to undergo specific types of regulated steps to be established in that way. So I still think that that's where regulation has to integrate in somewhere, and that's obviously what we're doing in specifically the securities space, but I think that will apply all over the place.
But I think it also goes back to assumption that decentralized system is somehow always better and superior to a centralized system. And I don't think that's true. There are certain cases, like in Europe, for example, and one of my clients is Getty Images, which is the largest library of images, and it's very fascinating for me to see what Coin is trying to achieve. And I think the way they have the system set up now works pretty well because, you've got company that has billions of dollars at stake that is incentivized to make sure that all the images are protected. They have all these web crawlers. They're making sure that no one is trying to steal it. And if anything, they give a platform for photographers to monetize their content. And maybe they don't like it because they have to pay to get it a little bit more, but I'm not convinced if they go direct. And once you factor in marketing costs and everything else, actually it's going to cost them less and transition costs. So, and they get paid in dollars, not in coins that tomorrow may be worth nothing. So, I don't know.
Other questions? There you go. Yep.
So that notice requirement, the notice that was issued by the IRS that governed convertible crypto digital currency. So that didn't cover Ethereum and other types of token-based blockchain systems. So to answer your question, there's no guidance that says what the answer is for that. But if you assume that by analogy that the CryptoKitty is intangible property, then when you acquire it, if someone just gives it to you, you'd have income equal to the value of that CryptoKitty. If you hold it and it appreciates in value, you're not going to have a taxable event until you dispose of it, if you trade it or if you sell it. I mean, there's no guidance right now in terms of how that's treated, because the notice only covered convertible cryptocurrencies. It didn't cover those other types of areas. So that's kind of a gray area that's not really clear what the reporting obligation might be.
Okay, I think we'll end it there. I'll be hanging out for a few minutes if anybody has follow-on questions. I'm sure Shane will too. I don't know everybody else's schedule, but thank you all for coming. I hope it was a fruitful discussion, and onward and upward with blockchain. Thanks.